Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
You can learn many things from children. How much patience you have, for instance. I am a light eater. As soon as it's light, I start to eat. Art Carney. I will not eat oysters. I want my food dead. Not sick, not wounded, dead. Woody Allen. A balanced diet is a cookie in each hand. Barbara Johnson. The only time to eat diet food is while you're waiting for the steak to cook.
Wall Street's mood just got a serious upgrade. Bank of America's latest Global Fund Manager survey shows 54% now expect a no landing scenario for the global economy over the next 12 months, while 39% still see a soft landing. Only 2% are bracing for a hard landing. That's a remarkable shift. Investors are increasingly betting that growth stays resilient, inflation cools gradually, and central banks manage to avoid pushing economies into recession. Of course, markets have been confidently wrong before, but for now, optimism is clearly back in fashion. China's economy is still growing, but it's definitely shifted into a lower gear. GDP growth slowed from 5% in Q1 to 4.3% in Q2, the weakest pace outside the pandemic in decades. That puts first half growth at 4.7%, below Beijing's comfort zone. The real issue isn't factories, it's shoppers. Consumer demand and private investment remain soft, while exports continue to do the heavy lifting. An economy cannot rely on overseas customers forever. Eventually, the home crowd has to start spending too. The wealth gap in America just hit another milestone. The top 0.00001% now control wealth equal to 12% of US national income, the highest on record and more than 4 times their share after the 2008 financial crisis. For perspective, this figure stayed below 1% for much of the 1950s through the 1990s. So what's driving it? A powerful mix of surging stock markets and soaring real estate prices. If you owned assets, the past decade has been a golden era. If you relied mainly on wages, the race has been much tougher. Here's the oil market in one chart. The US now produces 21.1 million barrels per day while consuming 19.4 million barrels per day, making it a net exporter. Meanwhile, China produces just 4.3 million barrels per day but burns through 17.4 million, a massive 13.1 million barrel per day shortfall, the biggest on the list. The top 3 producers, the US, Saudi Arabia and Russia, now account for over 40% of global oil output. That's why supply disruptions in a handful of countries can still send prices soaring. In emerging markets, geography still matters just as much as economics. Think today's market drop feels painful? History says it's almost normal. India's biggest winners, Infosys minus 83%, ICICI Bank minus 82%, and Reliance minus 68%, have all suffered crushing drawdowns. In the US, Nvidia fell 90%, Amazon 94%, and Apple 82% before becoming market giants. The lesson: volatility is the admission ticket to long-term investing. The companies change the world, but first they tested investors' patience. Sometimes the hardest part of investing isn't picking the winner, it's refusing to panic. SME IPOs are proving one thing in 2026: they're not for the faint-hearted. 91 SME IPOs have listed so far, but only 49.5% are trading above their issue price. The average return is a modest 13.5%, masking huge winners and painful losers. Apps' Aerocom has skyrocketed 251%, while Vivan Solar has crashed 94%. This isn't a rising tide lifting all boats, it's a market rewarding stock selection. In SME investing, one IPO can make your year, and the next one can make you question your life choices. As Peter Lynch said, know what you own and know why you own it.